Good morning, Oliver. We actually have global markets continue to hit another day, another record high. If you look at the Nasdaq, for example, the Nasdaq closed above 17,000 US, 17,000, following what was a charge that was led by Nvidia. Nvidia rose another 7%, and Nvidia has been on an incredible run this year as investors go all in on artificial intelligence, and it's now become one of the most valuable companies on the planet. Having said that, we do have a little bit more of a sleepy mode or a more negative session taking place in Asia. That's been led by Australia's inflation numbers coming in higher than expected. That might raise some alarm bells that although we are aware that the central banks will not cut interest rates as much as the market demands and what it wants, it might raise some suspicions that maybe if we do have another inflation shock, that the direction for interest rates could potentially be up rather than down. Although that is a very unlikely scenario, that might just weigh on investor tension. And as we head into some really key economic data releases from Europe and the United States between now and the end of the week, we might have a little bit of I would say, a range-bound trading session for global markets.
And in other news, silver is hitting an 11-year high. What can we draw from that?
I think silver should be paid its dues. Silver prices this year have gone up about 30%, whereas all the global headlines are really surrounding the outlook for gold. Now, the gold price might have increased by $600 over the past 6 months or so, but gold prices are actually up around 15% year to date, whereas the silver price is up nearly double that. I think there's a number of different reasons why investors are purchasing precious metals and the likes of silver too. For example, you've got central banks that continue to invest at unprecedented levels. That's 2 consecutive quarters where they've hit record highs for investments and holding into gold reserves. And I think that also does translate into good news for silver. Debt to GDP ratios continue to go higher. I think that causes some concerns. And we also have what has been very strong retail demand from China for many months. So I think that's also supporting that cause.
And what else are you keeping an eye on today in the markets?
Speaking of China, we've just had an upgrade to the economic outlook, the GDP outlook for Q1 from the IMF, now seeing growth of around 5%. I think that can cause some optimism around the global economy because obviously we're all reliant on trade demand from China. But typically, we are going to be really waiting for the music to beat from tomorrow, where we've got so much key economic data from Europe and the United States. It's going to be like a hot potato. Just give you a few examples. We have the US GDP numbers. We also have US quarterly PCE, price consumer expenditure inflation numbers, which is a very preferred metric for the Federal Reserve, the US Central Bank. And that also leads into Friday, where we have the real PCE numbers, which is going to be a very high economic risk as we conclude May.
Thank you very much for that, Jameel Ahmad.